What's going on, guys? Ryan Martello here at the Crypto Fiend Studios, and today we have an interesting video for you guys. We're going to be looking into 5 cryptocurrency expert investors to see what their opinion on the overall market is. What's going on with this market right now? Because I've tend to notice no one can really give a straight answer because there's no straight answer to give. So we're going to be looking at 5 investors across the board to see all their different viewpoints and kind of put them all together and get a final solution to what's going on with the market. Now to start things off, of course, if you're not subscribed, mash that subscribe button as well as give this video a thumbs up so I know that you guys like the content that I'm putting out. Now I know that the market's boring right now, not much is going on. Most of the days we're in the negative, and I understand that. So leave a comment down below what content you guys would like to see on the channel. It could be anything, whether it's a review, an interview, news, whatever it is, leave it down below so I can get a good understanding of what content you guys like to see. Also, in this video, we're going to be giving away $50 in Ethereum. All you have to do is leave a comment down below, maybe a comment about what content you'd like or anything as well as your Ethereum address, and I will be announcing the winner in the next video that I post probably tomorrow. So to start things off, what is going on with the crypto markets? Experts share their opinions. So we're going to be looking at 5 experts. The first one is Naeem Aslam. He is a chief marketing analyst at Think Markets, and he's a columnist in the Forbes. Next up, we have Amin Gunsier, associate professor at Cornell University. We have Tom Lee, managing partner, head of research at Fundstrat Global Advisors. We have Miguel Palencia, chief information officer at Quantum Foundation. And then we have Alistair Millen. I probably pronounced that wrong. I apologize. He's an investor and an entrepreneur at Atlanta Digital Currency Funds. So we're going to be looking into all these gentlemen to see what their view on this market is. So to start things off, we all know the market's not doing too hot right now. We're greatly in the dumps on an extreme dip over the past month, and no one seems to know why, but we can get a good understanding of across the board what's going on. So first off, Naeem Aslam, concerns with security and regulation. On June 11th, it was reported that a small cryptocurrency exchange in South Korea was hacked, and many mainstream media outlets tied this catalyst to a reason why we had the sudden downturn in the markets. So I'm not going to go into too much detail on it, but a South Korean exchange on June 11th was hacked for around, I believe, $40 billion. And a lot of people are thinking that this is the reason why the markets are going down. I think this is complete baloney. There's no way that one cryptocurrency exchange affected the market this much, where over $50 billion flooded out of the market. It just simply wouldn't happen, considering we have had hacks on exchanges in the past, and nothing like this has happened since. So a big reason why they're thinking it's happening is because a lot of mainstream news companies, stuff like that, are pumping out content saying, oh my God, this cryptocurrency exchange got hacked for $40 million, yada yada, and then people are getting scared and pulling out of the market. But this is complete baloney. I definitely think this is something to really cover up the main reasoning behind what's going on in the market. So this is what Naeem had to say. Exchanges are not utilizing the top-notch technology to protect consumers, and hackers are taking full advantage of this issue. The question is there any limit to these hacks? After every few months, we are seeing the same pattern emerging. This is the result of loose regulatory control, and regulators must step in to protect the consumers. Anyone who wants to do this with anything with an exchange should be forced to adopt high-grade security and regular security upgrades. So this is definitely a big problem we're seeing in the crypto space, is a lot of these exchanges are not keeping up with their security and staying ahead of the hackers, because unfortunately hackers are always going to be one step ahead, especially when they're utilizing blockchain technology to hack into these exchanges. So as much as we don't want to see regulation, we are going to have some form of regulation globally with these cryptocurrency exchanges, where they have to maintain their security and their regulatory high grade upgrades and all that good stuff, because it's pretty unfortunate how these exchanges get hacked And it's not just the exchange losing money, but it's a lot of investors that could potentially be losing money. And that's not fair to the investors, especially when they're trusting in the exchanges that they're using. So who knows, maybe down the road we can get better regulations on these exchanges, where if they do get hacked, they have to pay back the funds to these investors that are lost. Something like that. Maybe that probably wouldn't happen, but who knows down the road, maybe these governments will step in a little bit to make sure something like that happens. Now that's a big reason why I have started to like decentralized exchanges, because you don't have to put your funds on these exchanges. You don't have to put in your personal information, so everything is kept off the exchange, and you only use the exchange to make your transactions from crypto to crypto. So the next one we're going to be looking at is Amin Gunsirer. Right here, he talks about how a lot of people are pretty much cracking down on the manipulation in the market. A lot of people think that Tether and Bitfinex have been really manipulating the market, and I kind of think that as well. So a lot of articles have been going around that Tether and Bitfinex are practically the same company, and they've been working together to manipulate the overall market. And a lot of people think that's what we experienced back in December, was Tether and Bitfinex pumping up the prices of cryptocurrencies. Because if you guys didn't know, Tether can literally print as many tethers as they want with no issue at all. And the problem with that is that's exactly what we were trying to get away from in the crypto space, is we were trying to have that fixed supply. But when you have a cryptocurrency like Tether, where they can print whatever they want, they don't have the funds to back it up. So if everyone wanted to pull out of Tether at the same time, they would not be able to do that, and that would result in a huge market effect. At least I personally think right now in the market, if that was to happen, the market would crash greatly, and would be very unfortunate, and it would be all on Tether and Bitfinex. So that's a big problem we have right now, is Tether and Bitfinex that really need to disappear. So this is what Amin had to say. The current downtime and motivated by one such perceived risk: the law enforcement action on exchanges and their effort to put a stop to price manipulation. This was a long time in the making and cannot happen soon enough. I suspect that the law enforcement action will be modest in scope and will bring much needed clarity and positivity to the markets. I highly agree. It's unfortunate we don't want regulation. We want to be able to do what we want, but we need some form of regulation, because if we don't, we're always going to have these sketchy companies coming in, affecting the market greatly, and stealing from people. So we need these law enforcement actions to really remove all of that, and to have some pure clarity in the crypto space, and know that nothing is really going on when it comes to manipulation with the markets. And with that effect, with no manipulation, we won't have these crazy dips anymore, and that's definitely some positive news, at least for me. So down here, 3 reasons from Tom Lee plus future effects. So Tom Lee, the co-founder and head of research at Fundstrat Global Advisors, who is renowned for his bullish predictions on Bitcoin price, has given Cointelegraph 3 reasons why Bitcoin markets is diving. So first off, I think there are several factors why cryptos are falling. One, we had a parabolic movement at the end of last year. So there's a period of consolidation and price adjustment that is taking place. I also think that bigger factors this year have been a lot of government actions that have been taken this year that have scared crypto investors. Probably the most notable is the actions taken by the U.S. regulators, like the SEC taking action on ICOs. And then lastly, the pace of institutional investors' participation in the space has been taking longer than expected, and I think part of that has been due to the slowness of getting some of the on-ramps established. So he points out really the main bullet points right here. First off, he thinks the markets are falling because we have the parabolic movement in December, exponential movement, something that we've never seen before, and we're taking time to adjust to that movement. He also talks about how we are really starting to see governments stepping in this year in 2018, which is very true. We've never experienced this government step in until this year, and we're also having trouble getting these institutional investors into the crypto space, these big companies. And he thinks that's mainly due to on-ramps like Coinbase, GDAX, stuff like that, the big easy companies to get into the crypto space with. So those are 3 valid points that I agree with completely. If we go down here, we have Miguel Palencia, positions on whales. So for Miguel Palencia, Chief Information Officer at Quantum, which currently ranked 20th in terms of market cap, is at a current low, and due to has a lot to do with Fox's decentralized nature of cryptocurrencies, which are still expanding and distributing. So down here, Bitcoin, like other assets and technologies, go through cycles and affect its use, which is often correlated with the asset price. What we see here is that the cycle was escalated by situations which can be solved by full decentralized operations. Eventually, when the blockchain ecosystem becomes fully decentralized and not controlled by big stakeholders and whales, it will be bringing back trust into the markets, and we can see the markets climbing again. On the other hand, these market movers and shakers, supported by the true Bitcoin believers, will not let Bitcoin reach zero. Highly agree. There's not much to go over there. Whales play a huge role on the market. They really do. A couple whales in the space can really affect the overall market and bring us on a great downtrend. If we can get the market to that level where we have some stability, where the whales don't play a huge role anymore, then we could definitely have some clarity, sit back and watch our cryptocurrencies grow across the board. But right now, when we're around $280 billion, the whales can affect the market however they want, and it's very unfortunate, but it is what it is. So next up, we have Alistair Milne's view on rapid slowdown. Alistair Milne, CIO of Atlanta Digital Currency Funds and founder of CoinTrader, is examining the entire year's performance and putting that December rally into perspective. So if we go down here, altcoins particularly become very overvalued, and we're overdue a correction. We are now searching for equilibrium again, where demand meets supply. From a macro point of view, it has never been better, so I feel comparisons to 2014 to 2015 are misplaced. I think after we eventually bottom, it will be a far more gradual comeback, for the price likely accelerating in 2019. And then they talk about no need to panic. So to sum all that up for you guys, I agree with all of those. I mean, there was not one statement in any of those 5 investors that I don't really agree with. Because right now across the board, let's go check out the market. Right now across the board, all of cryptocurrencies are being affected to not just one thing. And it's unfortunate, but there's not one thing that really is controlling the market at this point. And I think all of those investors pointed those out greatly. First off, we had, what was the first one? We had regulations, security and regulations on exchanges. That definitely has to change when it comes to exchanges and their security and people losing money, because that's going to scare a lot of fundamental and institutional investors away from the market in general. Next up, we had crackdown on manipulation. A lot of governments are starting to step in, especially the United States, to figure out why the market's doing what it's doing and figure out who's manipulating the market. Because if we can figure out who's manipulating the market, which Tether and Bitfinex probably play a role in, we can overall fix this issue with these crazy dips all the time. Next up, we had, what was this one? We had a lot of 3 reasons why. We had a period of consolidation where we were trying to really figure out where we're going next. Then we had U.S. regulations with the SEC. And then finally, we had this time where institutional investors aren't necessarily jumping into cryptos right now because they're trying to figure out what's next. Is it going to the ground or is it going to the moon? And it's most likely not going to the ground. And then we had whales. Whales in this space play a huge role in the market. If we can get to the level in the market where whales don't play a role that much anymore, we will see overall cryptocurrency growth gradually across the board. And then finally, we had rapid slowdown. We went up from $20,000 down to around $11,000, up to $16,000, and back down again. That is not healthy, especially when you have a lot of people that don't fully understand cryptocurrencies but want to invest, and they see that, they get scared and they stay away. So if we can get this gradual growth over the next year, I think that will be phenomenal across the board. So cryptocurrencies as of right now in this state, $281 billion in market cap. We're really at this stagnant level where we're moving sideways. There's no real way, again, to determine the true meaning of what's going on. I think those 5 expert investors definitely hit the nail on the head and gave us an overview of all the things that take effect. But until here on out, we can't really determine where we're going to go in the market. And I know you guys want to hear what's next, but the truth is no one can tell you. So if you have someone saying it's going to the moon, they don't know what's really going on. They're just pulling stuff out of their butt and giving you guys something to watch. So right now with the market, as you can see, this is the 1 month. Not much going on. We're at a low for the month and we're moving rather sideways right now. So hopefully we can get some good news in the space, maybe some regulations that will help cryptocurrencies. We had the SEC announce that Ethereum was not a security, so that is some good news for Ethereum, but unfortunately it did not help the price movement that much. So that's really all we're going to be looking at today. Let me know down below what you guys think is really going on with the market. Do you think it's all of these across the board that we read into, as well as let me know down below what more content you would like to see on this channel, and also be sure to leave your Ethereum addresses because I am going to be picking one winner next video for $50 worth of Ethereum. Thank you guys so much for watching. If you're not subscribed, of course, hit that subscribe button for everything crypto related, and I will catch you guys in the next.